Hey guys and girls, hope everyone's well. Welcome to the next weekly market breakdown. So as you guys know, Mondays, they are my least favorite day. So I do try to kind of just observe from the outside and then obviously wait until 24 hours or so has gone past so we can start to see what the market has done so far for the week. Okay, so kicking off with DXY. Okay, kicking off with DXY first of all. As we can see, last week's candle, which is this one here, we can see a bearish candle. And that bearish candle basically tapped into the previous week's low before we actually rejected and came back up. And now we are continuing to push higher. Okay, and that signifies for me as well when we've got all of these sort of grabs for liquidity. Okay, all of these grabs for liquidity to the upside. Okay, every single time we are still, as it stands, failing to break this upside momentum. Okay, obviously we're at a key level now, we're at 99, but we've also got 100 to be targeting, and we've also got the level of liquidity. Oh, I swear this is never smooth, this video, because there's always something that messes up. Okay, so we've got this level of liquidity here, which is quite interesting for me, which is where potentially I can see us pushing up towards the DXY. And there's a lot of liquidity there as well, because we've got this kind of level here as well. And then even further up there, we've got this level, okay, which is our 102, okay, 102 region. So there's a lot of upside potential, okay, a lot of upside potential. And previously we had this level, which we just missed. So we created a higher low down here. We're unable to break these lows down here. And actually then it just seems like we are going to continue to push and continue on this USD bull run, okay? So make sure you're being sensible when you're placing your trades. And what I mean by that is don't try and go against the trend unless you've got a lot in your favor to do so. So the only time I would go against the trend in DXY is if I think massively that, for example, let's take Aussie dollar in the last couple of weeks has been very, very strong. And therefore, if we jump onto the Aussie dollar chart, what we'll see, Aussie dollar USD, is we'll see that even though DXY has been bullish, Aussie dollar USD has actually been going up as well. Okay, and that's because the Aussie dollar has been very, very strong. So just bear in mind, the overall potential directions of the market before you jump into your positions. However, what I always say is if you're looking at trading anything, let's just say I'm looking at trading EURCAD. Okay, if I was looking at trading EURCAD, first of all, what would I say? I would say we're nicely bearish. We're continuing to push down into this area of liquidity here, which is pretty much where we are right now. But what I would also look at, I'd start looking at other Euro markets and see if I can see a similar trend. So I can see on most of these Euro markets, apart from JPY, we're bearish, right? And then if I look at other CAD markets, okay, CAD is pushing down on USDCAD. CAD and CAD CHF is going up, CAD JPY is going up, meaning that CAD is potentially strong right now as well. So looking at short positions on EURCAD makes sense, okay? So just make sure that you keep that stuff in mind when you're placing your trades, okay? So with regards to DXY on the weekly time frame, okay, I'm looking at pushing up into these regions in the coming weeks, but we don't really care about what's going to happen in the coming weeks. We just care about what's happening right now. So right now, we've got this area of liquidity that's been tapped into end of last week, and now we're bouncing up again. So what's the first point of call with this market? Okay, we're probably looking at this 99.25 region. Okay, obviously it's a bit of a range right now because we've got a lower high created here, we've got a slightly higher low created there, so we're pretty much sideways in a range right now, and at the minute we're in the middle of that range, so just be careful with positions you're taking. But I do see us pushing up and potentially out of this, whether it's this week or whether it's over the coming weeks, we'll have to wait and see. If I jump down onto the 4-hour time frame, and if I was to just whack on the moving averages, okay, let me just check they're correct. 18. So I do look at the 8 as well, just for that overall sort of direction, but it looks a lot nicer on a 1-hour time frame. So what we can see is we've broken above, we've came back, retested these regions, and now we're pushing and we're continuing to make new highs. So we haven't really got any resistance here until we get to probably this kind of level right here, okay? So 99.2 would be my kind of target, at least for now, to see the XY be pushing up. So let's have a look at everything else. So if we go on to DXY being bullish, we've got Aussie dollar USD. Aussie dollar USD last week, a nice bullish week again. This week so far, we've come back down and kind of retesting that previous week's open. Okay, this one here. But again, we've got the lower highs creeping in. We've had this one taken out, and this is our kind of major level right here on Aussie dollar USD that we might see Aussie dollar USD come into this region before potentially we see that turn around and it kind of catch up with the USD if Aussie dollar does change direction and begin to weaken. But right now, looking on the weekly, we've got no real reason to be shorting that. Okay, even though we are potentially bullish of the dollar, as I just mentioned, dollar has been rising, but Aussie dollar USD has also been rising. So on the weekly time frame, we have to be targeting this kind of region here. You can see the grab for liquidity last week. If we go on to the daily time frame, we're very high right now as well, so I don't really like anything at all. If I was looking at trading it, I'd be waiting for something like this. Okay, pulls back into this region before actually looking for long positions. And again, if we look on the 4 hour, we've got this kind of order block right now, which is where we are sitting at currently. Now, when we go on the 1 hour, we are below those moving averages. Actually, we're kind of ranging and moving sideways. So again, nothing really going on with this market right now. And if we just draw that range in as well, again, this is just rough, but if we just draw that range in as well, as we can see, we're pretty much moving sideways. So sensible things to do on this, okay, would be to seek the liquidity here and looking at potential buy positions, okay? But again, just keep an eye on the other USD markets, because what we could potentially see is the other Aussie dollar markets, because what we could see is we could see a change of direction. But this consolidation, this area right now is probably just a way to grab orders, and therefore just look at this level right here, 7375 and below, to look for those long opportunities, and potentially then pushing into the highs up here. So that would be my direction, my directional bias on Aussie dollar USD. If we go on to GBPUSD, I'm just going to close these. So last week we grabbed into liquidity, which is this area here, and we actually bounced back out of it, okay, with a bullish candle. Now, the only thing with this bullish candle that we did have, that doesn't necessarily mean that we're going to turn around just yet, is number one, I would class the weekly order block, even though I don't really use these, but just to give you guys an idea, I'd class the weekly order block as probably this one here. So I still think there's potential for some downside movement, especially with that USD potentially being pushed all the way up into those 99s and 100 regions. Also, last week's weekly candle pushed up all the way up here, but it didn't close above the previous week's high. It didn't even breach the previous week's high. Okay, it didn't even breach the previous week's high. Because of that, that kind of signifies to me that the pressure is not quite enough to consider a complete turnaround on this market just yet. So I'd still favor the downside momentum. If I go onto the daily time frame, daily time frame looks quite nice from an aspect of liquidity, which is this area here. So as of yesterday, we rejected that area again. We posted a bearish candle, and now what this candle is looking at doing, which is actually what it just did this very second, is it just breached the previous low. Okay, it just breached the previous low there. Okay, so even from a swing trade perspective, again, I wouldn't do this entry wise, but from a swing trade perspective, having a position like this, okay, first target here, next target anywhere down here, that's the kind of opportunities that I'd be looking at getting hold of this week. Now, if we go on to the 4 hour time frame, then we can start to tidy things up and find better reasons for entry with better risk rewards. So 4 hour doesn't really give us too much. This is our highest candle and our last candle before the push down. So this would be the candle where I'd be interested in getting involved, which automatically would increase that risk reward. Which automatically would increase that risk reward. If we go down to the hourly time frame, is there anything else? So at the moment, market is quite bearish because it's failing to even come back and grab the liquidity and the fuel from the order blocks. Okay, so I'd probably be hoping for something like this if I was looking at jumping onto GBPUSD. We've also got the order block up here as well, but I don't know whether we'll get that. We'll have to see what GBP has in store for us this week. But these would be the kind of areas I'd be interested in seeing GBP get to in order for us to take positions on it. Now we've also got, hopefully you've seen me do this before sometime. So we've also got this kind of trend line here as well, which as you can see has actually now broken. And underneath these trend lines are a lot of liquidity as well. So we could see that further push down into these levels. Now be aware that the first stop really for this market is this wick, this low. So just be aware that this region right here, 1.3080, which is about 40-50 pips from where we are currently, is probably where we're going to get to first. We've also got the previous highs here, so there's a lot of synchronization around this point to at least see, you know, a bit of a slowdown if we are going to go lower on this market. Okay, so just bear that in mind as well. So GBP USD, we're looking not bullish, we're looking bearish. EURUSD. Let's have a look at what these old markings are. So yeah, high to reach, we smashed that high. Okay, let's go on the weekly. Okay, so firstly what we do is we study last week. Okay, we study last week and we see what it did and why it did it. Okay, so we were bullish last week and we also rejected this last order block the week before. Okay, so we rejected that area. Now we did find some bullish momentum, okay, but where did we get to? Okay, we also breached the previous week's high, which is interesting, but we rejected up this level and we closed with what I would consider not a powerful candle, in terms of it's pretty much, yes, the buyers won, but it's pretty much 50-50 in terms of buyers and sellers at this point, and therefore because of that, we have to consider that potentially EURUSD could continue its fall, especially when we looked at Euro earlier. It was still looking bearish. So EURUSD could be a good trade on the cards this week. So if we go down onto the daily time frame, okay, if we go down to the daily time frame, what can we see so far? We can see that the market has grabbed liquidity, okay, on the daily time frame from this area in the last couple of days, and we can see that also, again, just look at this. So this is what I showed you on GBP USD, that slight breach there. Let me just zoom in so you can see it. That slight breach in a bearish candle here, okay, gives us that potential insight that the market is going to turn from here. And as we can see now, we are breaking that and actually potentially even going to close below that today, which again could signify the same kind of move as GU, which is actually pushing down to this low and then pushing down even further. Now that's actually a lot of pips. That is a lot of pips. We're talking 170, 180, 200 pips, okay? And that's just to the previous low where we know that's kind of the first stop, okay, the first stop. So obviously be careful around this level, which is where we have liquidity on the daily. Be careful around this level, which is where we have liquidity on the daily and the weekly. But we could see that new leg forming and being created now as well. So on the 4 hour time frame, we can see break of structure. Okay, here, just delete this one. We can see the break of structure and we can see the pullback. Now we would have hoped that the market would have pulled back to this level on the 4 hour, but it didn't. But if we go down to the 1 hour, what can we see? On the 1 hour, again, we're just missing. So the momentum on USD has been quite so strong that it's not even pulling back to our levels at the moment. So that's something to be aware of. The first time we pulled back to a level which was tradable was this one here. So at yesterday, yeah, 21st at 6 o'clock, which is, or 5-6 o'clock, which is about 3 o'clock your time, because I've got UTC +2 on here, was our first opportunity for that potential short. Okay, and as you can see, it would have played out really, really nicely. Again, just look at it though. It's break of structure, it's pulling back into the moving average, then it's waiting, being patient, and trying to find it. And look, we've got a nice powerful candle there. So we've got the rejection from this level here where there'll be a much lower time frame order block, but But then we have that nice powerful push out. Okay, again, we have, just need to cement this into your brains, guys. Break of structure, pull back into order block, off we go. Okay, again, even that, a trade like that yesterday with minimal drawdown, and if you wanted to be safe, you've got a 20 pip stop loss. That there is a 3.2 risk reward so far, with the potential, as we know, that the market is going to be coming down into these regions here. Okay, so huge potential risk rewards at the moment because of the market conditions. So we need to capitalize on those. Okay, so that's Euro USD. So I'm still looking bearish on Euro USD. Again, this is very similar to GBP USD, where there's not really great opportunities or potential for those entries into this market at the minute. So we're just going to have to wait and see if we get it. Okay, but again, all we need to do is just break a structure, wait for the pullback into the previous highest candle and the last bullish candle. Okay, but it's a bit choppy because USD is a bit strong at the minute. NZD USD, let's just go into the weekly. Still bullish. I'm going to leave NZD USD because it looks pretty much the same as Aussie dollar USD, so that's fine. USD CAD last week, very bearish. Rejections around this level, rejections from this liquidity. Finally, we get a closure. Okay, a closure below these weekly levels right here, and a real big solid push. So where are we targeting? Well, there's two regions. We've got this one here, which is quite a long way to go. And we've also got this kind of region here as well. So this is the areas that we're going to be looking at potentially targeting on this weekly time frame. We've also broken structure here on the daily time frame. Okay, very very strong bearish pressure right now. Very strong bearish pressure right now. So finding an entry on this again might be quite difficult. If we look on the 4 hour, there's obviously order blocks all over the show, to be fair. Just trying to find a sort of pinpoint potentially nice. I would say personally that if I wanted to short this market, I'd want to see rejections from this kind of level here. Okay, because we've already had, this is the 1 hour time frame, we've already had this one tapped into. So this kind of large one that we have here would be of interest to me. We've also got this kind of level here, but again, let's just wait and see what happens. We want it to be clean, right? We want to see that solid bearish candle come out of that region for us to be what's the word? So I'm losing my train of thought this morning. For us to be confident that the sellers have come into play and the sellers could potentially flip this market. Now, the thing with USDCAD as well is obviously, as we know, USDCAD is quite bullish. So we need to, USD is quite bullish. So we need to see that CAD is continuing that strength, because that's what's going to fuel this market to push it even further. But it does look nice and bearish, so I probably wouldn't go against it. But we need to get good at entries on it, and we might be able to do that simply because USD is also strong. So we could see those pop up into this kind of region here. If we have a look at USDCHF on the weekly, so USDCHF I'll probably leave alone because we had that big rejection from there last week. We've got bullish order flow. We were unable to go past the low. My bias on it would be bullish. We have also pulled back into this region on the daily, which is quite crucial. So I think we'll go ahead and sort of retest these highs up here. And if we jump onto the 4 hour, again, we've got a nice break of structure here. So now what we want to do is we want to be looking for opportunities to enter. And again, similar to the other USD markets, there's not many. So I'd probably highlight this kind of area here, and I'd also have this kind of consolidation here as potential places for this market to fall back into. Otherwise, we don't buy. Simple as that. Otherwise, we're just patient and we just wait. It's as simple as that. We don't need to force trades. We don't need to trade every day. Fungi, we don't need to trade 20 trades in a day, even though you're doing very well. So keep it up. So USDCHF bullish. So gold. So gold last week was kind of annoying for me because I did actually expect this current move, which is happening, but we just never got that. We never really got that real push or momentum out of that region. Okay, so just on the weekly time frame, what we've done is we've come back and met this level here, which we broke out of. Okay, and as soon as we did meet that level, we really did bounce from it. Okay, and we bounced from the kind of order blocks that are in here. And now it does look, even though we got bearish pressure, I'm just thinking more about the fundamentals and what's going on in the world, that I don't quite know if it's ready to chill out and go all the way back down to 1800 yet. So we've got this kind of head and shoulders region here. But again, just looking at the price structure right now, we're ranging right now anyway from 1950 to 1920. Okay, so a 300 pip range right now. But we are failing, okay, we are failing to break this daily here. And we also are failing right now to break this level here. Now, this is going to be more of a potential momentum based trade, which is looking and seeing if this market breaks out of this region. If it breaks out of this region, then where could we head to? Well, we've got this area right here, which is huge. You're looking at 600, 700 pips from where we are now. We had a bullish candle last week. We didn't close we had a bullish candle yesterday. We didn't close above this one, but maybe today we can start to push and attack the previous day's high, which it looks like we might do, and actually break out and up. And if we do break out and up, then we've got this kind of clean run all the way up here. Okay, we might get some resistance around this kind of level because we've got a lot of wicks here. But otherwise, we can potentially see this market pushing up into these levels here. So if I go onto the 4 hourly time frame, again, you can see we're above the moving averages. Again, with the 4 hour, our last bearish candle and our lowest candle is there. So we've already broken above this, come back, tested, and kind of now pushing up again. And if I go into the hourly time frame, we have also dug into this liquidity yesterday. That's early hours of this morning. So we dug into this liquidity here and continuing that push. Okay, continuing that push. So really with gold, if we want to keep this bullish bias, okay, which I'm quite happy to do, then we've got potential opportunities pretty much anywhere around here. So as long as we're below that moving average, and as long as we continue to hold these kind of levels right here, this kind of 1929 to 1935 region could be where we start to see a nice setup forming for long positions. And those long positions could take us very, very fucking high. So just keep your eyes peeled for that. Yeah, keep your eyes peeled for that. Keep your eyes peeled to see if maybe we actually just come back into this area of liquidity. But definitely going to be looking and focusing on a break of these highs up here, which is 1950. So it's 150 pips or so. And then we can see how far we can go from there. So gold, I'm going to be bullish. Let's have a look at some of the Aussies. So Aussie dollar CAD. So kind of a range. Okay, we've had a real nice bullish movement for a while, but then these last 2 weeks have just created a gigantic range with a big wick on the upside and a big wick on the downside. Okay, so there's a bit of indecision on this market, and it's kind of makes sense because Aussie dollar has been very strong and CAD has been very strong as well. So we need to just be a little bit careful with the likes of Aussie dollar CAD. If we go onto the daily time frame, let me just change this to just have a border. Yeah, let me just change this to just have a border, but no background. There you go. So that's our kind of big ass range that we've got right now. On the daily, we have to be careful because potentially we've broken structure and potentially we are at this point here, which is the daily order block. Okay. But again, we're kind of trapped in this range, right? We're just kind of trapped in this range. So we've got the order block to the downside, we've got the order block to the upside. So we've got too many reasons to be holding the price at this kind of level here. So really what we want to see is a significant break on either side. I'm just looking at USD right now. USD is strengthening quite strongly actually. So Aussie dollar CAD. Aussie dollar CAD is a tough one. It's just too hard to really come up with a bias on it. I would say based on the weekly time frame, I still prefer the bullish moves. So just make sure if you are trading it, you are getting safe entries, low entries, and a good reason to do so. I guess a setup would be, if we are bullish, is seeing if the market breaks this level right here. And then if it does break that level, then we can hopefully pull back into one of the lower time frame order blocks around here. So it'll be looking for coming up here, coming back down, and then actually going from there into those highs and potentially even higher as well. That would be my favored move, but again, it's not my favorite market. So I'm going to mark it as bullish, but whether or not I trade it, we'll have a look. Aussie dollar CHF, don't change that bias. We can just see that it's just pushing. We've grabbed this liquidity. We've closed in this liquidity. We've come back and tested that liquidity. So now I think we are looking around here for targeting a 6950, maybe even pushing into 6975. So continued bullish movement on Aussie dollar CHF. If we go onto the daily, if we go onto everything, you can see on the 4 hour, we've come back into this region right here. And then we've excelled from there. So we are probably looking at taking out the high, which is here. But again, is there any real potential for entry right now? Not really. The riskier aspect is waiting for the market to pull back into here and then looking at long positions and trades into, probably put it behind that wick right there, trades into the high and then potentially even further, and leave your runners to go even further than that. Aussie dollar JPY is probably going to look pretty similar, maybe even stronger. Yep, even stronger. So we are absolutely flying on Aussie dollar JPY right now. We are at some serious highs as well. Highs that haven't been touched until since 2018. So again, like I'm not even going to analyze this market because we're literally at the top. Even on the 4 hour, the last 4 hour order block is around 70-80 pips away. So I'm just going to leave that. CAD CHF. Bullish, again, very high right now. Coming back, grabbing liquidity. So CAD is strong. CAD is very strong right now. If we go on the 4 hour, what can we see? We can see the last bearish candle and the lowest candle, which is here. We pulled back into that yesterday at 3 o'clock, and then we've already accelerated from that point 50-60 pips or so into the high. So even this objective has been met. Okay, all we care about is reaching that last previous high or previous low. So again, yellow because I'm probably not going to have a look at any positions on it. Same with CAD JPY. JPY is just very weak right now. And just absolutely flying. There's not going to be any opportunities. So you can skip that and you can look at other markets, okay? Germany. So with Germany, big bearish movements, but now I wonder if we're now kind of picking up that liquidity, that higher low. That one pulled back into this region here. This one's pulled back into this region here. So potentially, we've now got some signs of bullish pressure. First of all, we had the rejection and the big rejection. Second of all, last week we had that breach of the previous week's high, okay, which is always significant as well. Let me just turn off the moving averages. And then even yesterday we had that kind of pull back down into these regions as well. So I guess the daily order block is this level here, which we have just about missed. So just be careful that you might see a little drop down into this region. On the 4 hour time frame, we've got, I wouldn't be calling this an order block. Okay, and the reason why is because, yes, we had some momentum out of it, but we didn't actually break or breach the high. And because we didn't do that, there was no significant move from it. Okay, whereas if we look down and we look at, for example, this little one right here, there's more chance maybe of this one being met because this was the one that actually drove us out and broke new highs, and that's where the real momentum came out and pushed us up higher. So I'd probably be more interested in that kind of level. You can see this one here, and also this 4 hourly one is quite big as well. So yeah. So I mean, we can absolutely bounce from this level, of course we can. But do I find it favorable? Does the reward outweigh the risk? Realistically speaking, if I was to enter this market right now, I'd have to have a stop of 220 pips, which for me, just not interested in doing. Not on a short term anyway. So yeah, I'd probably just be a bit more patient, and at the very least, I'd probably wait until this liquidity gets tapped into again before looking at entering. If we look at the other side of the spectrum as well, what can we see is the market has slightly broken this previous low, and then we've got bearish order flow. So we've got the market retested off of this level, the market retested off of this level as well. So yeah, I'd be a little bit more patient personally. Not saying it's not a good position, but it's quite a high risk. It's quite high risk, and also we're going to have some sort of support resistance sell off around this level as well. So that's our kind of levels on Germany, but still going to be bullish overall. Euro Aussie, as we can see, we had big spike up last week and now big rejection as well. We've also broken the low of last week's candle, so it looks like this kind of bearish momentum is going to continue, and hopefully it can continue all the way down to 1.4565, which is that wick. Okay, so Euro Aussie bearish momentum, bearish pressure looks quite nice, to be fair. Daily doesn't really show us anything. Probably smart to just mark on that closure, okay, which is this one here, which is about 40-50 pips from where we are right now. But on the 4-hour time frame, to get a good entry on this market, we are probably going to have to pull into this kind of region. Yeah, something like that. If we go into the 1 hour, we might find something a little bit cleaner, which is, yeah, there's not too much. So Euro Aussie bearish moves from maybe around here, This is the 4, this is the 1, and potentially seeing a big move to the downside. Big move to the downside. So let's see what happens, or let's see if we can reject it. That would be funny. EURCAD. So my analysis on EURCAD last week was absolutely spot on. I don't think I've got this saved, but I did message one of the guys in our groups regarding this. And once we saw that rejection, it was the hourly. Once we saw this rejection after this bullish move, okay, for me, that was the stop hunt. Okay, that was the grabbing of liquidity, which is around here. And then actually we propelled lower and then actually broke that previous low. So momentum, bias, everything, we are still bearish, but be careful because we're at key levels now. Yeah, just be careful because we're at key levels. I'm not even going to find any positions here because we are at the lows. So when we're at the lows, we don't want to be finding positions. We're better just staying, waiting for those more solid opportunities to come through. We've got Euro GBP on the weekly. So where are we? Still riding this bearish trend. Two nice rejections last week. Looks like we've pushed and breached below previous week's low as well, which is also good to see. Where have we rejected from? We've rejected from the last candle, which is this one here. So I think potentially we will see us and could see us pushing down into this region. Okay. Now bear in mind, if that is mainly driven by GBP strength, then be careful of GU. Because if GBP is going to strengthen, but USD is going to strengthen as well, then we might not get that move that we actually want on GU, which is falling to the downside. 4-hour time frame. So if I was to be doing anything here, what I'd be doing is I'd be waiting for this region. And if I go onto the 1 hour, Yeah, I'll be looking for that kind of region for short positions on GU. And then obviously, as you guys know, straight down into that previous low. Okay, so bearish. EJ is doing completely the opposite to anything else. JPY is very, very weak. So I'd leave that alone. I literally wouldn't even look at it. Euro NZD, I'm going to leave that because it's the same as Euro Aussie. Okay, so we've got bearish. Just be careful when you're looking at entering, that you're not entering too high and you are waiting for those pullbacks, okay? Because if it flips and changes, you don't want to be selling here, which is the lowest point it's been at this week so far. You want to be selling here or here or here, okay? So 1.60 could be a nice level, which is only 25 pips away. And it comes in just about with this order block here. So 1.60 on Euro NZD could be a shout for the short opportunities. GA, very bearish. It's very similar to EA anyway. So again, I'm not really going to analyze this, but you can see where we've got that potential liquidity down here. So potentially nice big move, 200 pips or so on there as well. But as we flip through the time frames, look where we are. We're at the bottom right now. So just be very careful in trading this, because all it takes is for this to turn into a range, and you're just going to get wiped out by being selling at the bottom of a 300 pip range. Okay, so just be careful. GBPUSD, again, nothing really I can say or do there. Bearish, continued bearish into around these kind of levels here, 1.63. No, a lot of pips up for grabs, but we are at the low, so just be careful. GBPCHF on the weekly time frame. It's not very clear, to be honest. Not very clear. It's going to depend on what GBP wants to do more than anything. So I'm going to leave that as well. There's nothing really to be concerned about on that one. GJ will be quite high, so we'll leave that. GN will be the same as GA and EN. And then finally, we have our NZDs as well. So NZD-CAD on the weekly, sideways movement, leave it alone. NZD-CHF, bullish movement, but where are we? We are now sitting at this level right here. So again, just be careful. There's a few markets to really not necessarily avoid, but just be very careful. Make sure you're looking at the higher time frames and seeing where we are before actually executing and jumping into positions. Obviously, we are bullish, but on the daily, we haven't really got even an order block to work on from the 4 hour. So I would leave that as well. NJ is going to be sky high. So again, leave that as well. So guys, I hope you find that useful. If you've got any questions, let us know. Let me know what trades and stuff you're taking. Big shout out to Fungi as well. Jordan Mace, he has been absolutely killing it so far. And I think he shared in the groups kind of what he's doing. He's really critiquing himself as well, which is great to see. So he's really assessing the trades that he gets wrong, even the trades that he gets right as well. And he's actually grown his account from £200, I think, to almost £700 in the past 2 or 3 weeks, which is really, really good to see. And as most of you guys know, he was at the beginning, he was really struggling. He was having a lot of red days. It wasn't really clicking. And after a few videos, a few breakdowns, and really knuckling down and learning what we're looking at here and how to do this, that's what he's been able to achieve, which is fantastic. So congrats, mate. Well done. And you let us know when you're on £1,000 next. So 200 to £1,000 in 4 to 5 weeks, I think is massively achievable for him. So well done. But anyway, guys, have a great week. Let me know what you're looking at, and I will speak to you guys soon.